Hey traders, what's up? Jamie Saettele here. It is December 15, 2021, and welcome to the Power Hour. FX, commodities, indices, crypto, whatever. We're actually going to dive into, towards the end of the webinar, we'll look at some interesting statistics on some advanced decline stuff in equities. Haven't really had much to look at with regards to AD stats in a while, and they are getting to interesting levels. All right, so let's start. Here is DXY. This is a chart that we've been staring at for like a month. I'm just going to read you what I wrote last night. So dollar remains stubbornly up to flat. The psychological situation reminds me of early in the year when the dollar was stubbornly lower for longer despite multiple reversal signals and extreme sentiment. Of course, price eventually resolved higher. So I find myself almost always early when it comes to a turn. Which from a trading perspective is just as bad as being, a little bit late, really. And that's from a trading perspective, right? Not from like an investing perspective, but from a trading perspective, like in FX, commodities and stuff like that. Because in leverage trading, because if you're too early, I mean, you're still losing money, right? You're going to be stopped out a whole bunch, or just be wrong. So being early is just as bad as being late. And I've been early on this for like a month. However, we haven't. Let's see what happens today. Obviously, we have FOMC today. We've got BOE, ECB, and BOJ tomorrow. So there's a ton going on this week. And then we're getting to kind of the holidays, Christmas and all that, New Year's. And so really the next couple of days is kind of, the biggest of what's left. So anyway, here we are, and this is really all I've got to tell you. We're still pressing this level. I mean, the high was 3 weeks ago. These weekly candles up here, the last 3 weeks, to me, man, these look really toppy, right? I mean, spinning tops, dojis, what have you, massive resistance. And then, of course, this week it's been literally straight up. Now, again, we do have Fed. So let's see what happens. This also is a chart. Gosh, this is a beautiful chart. This is a close. This is a chart of closes. So it's a line chart. This is DXY on a closing basis. And, it's important, by the way, I think to draw, play around, draw trend lines and whatnot off of closing levels along with highs and lows. And, sometimes the market will adhere better to closing levels, actually. So, yeah, here's that same trend line, okay, closing levels that we just looked at in the weekly chart. You can see it's like literally to the tick, the close, right, that we closed at here the other day. So, again, big confluence for resistance. We've got beautiful pitchfork that nailed the low, center line. Here we are at the top. Maybe we spike higher, reverse. I don't know. Let's see what happens again. But, we're there in that kind of in that ballpark. I actually want to see what we're at the right levels, right? I want to see what Google News looks like. Let's go to Google. All right. So we don't really have any crazy headline. We had one like a couple weeks ago. This guy's nuts. Bitcoin, US dollar is going to zero. Okay, zero against what? He realized that Bitcoin's still priced in dollars, right? we don't really have any crazy headlines yet. Maybe I don't know. Maybe we do need a crazy spike or something. We'll see. But regarding headlines, I thought this was interesting. UBS Chief Investment Office stops coverage of dollar Turkish lira. As we all know, the Turkish lira is literally a straight currency crisis. It's been getting absolutely murdered. But this kind of headline is interesting to me from a contrarian standpoint. I am by no means have any desire to wade into Turkish lira at this point. I just wanted to point that out. Okay, moving on. Euro, of course, right? Big one for the next couple of days. Here's a daily chart. Again, trend lines, and this back to 2014. And depending on how we draw it, right, you can go off here. Excuse me. Oh, tired. Perfect level. And by the way, do you know the 618 retrace of the rally from 2017? Actually, it was 2017, wasn't it? That was the first day of 2017. I remember that day well. First day of the year low. Okay, going up into the February 2018 high. 618 of that is 111.86. The low 3 weeks ago is 111.86. So, you know, that combined with the trend lines, again, huge level, huge support, all that good stuff. Let's continue on. So you see the magenta line here. I would consider that your trigger line for longs. Now I'm going to kind of zoom in here to an hourly chart. This is what's been so damn frustrating over the last 3 weeks. So literally in the course of like a couple days, we had from the November 24th low, we had this, 200 pip rally in impulsive fashion. 1, 2, 3, 4, 5. Right? Do you remember this? This was the Powell speech, which was on the last day of November. That crazy move, and essentially, we dropped back to kind of ideal support from an Elliott standpoint. And I thought at that point, okay, that was your fast correction, whatever. Now we can go on our merry way to the upside. Well, we've done jack since then. Absolutely nothing. The market has just been disaster. Like, I mean, just, it's disgusting. Anyway, A, B, thought this was C. Nope. Right. So I don't know. We'll see what happens. FOMC, ECB, all that stuff. But based on just straight up on this, from a pattern perspective, I'd be looking for something like this, I guess, with FOMC. Just like a quick, where's that path thing? Here it is. Complex correction maybe. So, maybe take out that one, whatever, what is that? 112.20 something, and then rip face for a while. So I don't know. That's where my head's at. Again, maybe drop below 112.25 and then just go straight up for a couple of days. That's what I head into all this central bank bonanza thinking. Okay. All right. Let's go to British pound. Cable, I don't have, much of a willingness to trade this right now. That could obviously change with, sorry for all the yawning. My son was waking me up this morning, like 4:30. Heavy winds are in the area, but no tornadoes, not like last week. All right. British pound. So I said, like I said, we are at a huge level. I much prefer euro. Again, just to review, same exact things last week. Literally nothing's happened since. But we have March 2020 high down to the December 2020 low. And those two things are bracketed by the 38.2 retrace of the entire rally from the March 2020 low. So we're talking 131.30 to 132. We are in the vicinity, and channel as well. So again, thinking that we are in bounce territory. This being British pound, we might need to get some sort of a brutal, tank job on BOE or something like that before it reverses higher. Just a thought. I want to see something here. See where VWAP is. Here's another great tool on TradingView. Volume weighted average price, by the way, from the March 2020 low continues to hold up as support. You saw what happened over here, right? Back this VWAP stuff over here. Okay. Again, this being pound, tank below, rip, tank below, rip. Let's see if maybe something similar here. We could hold this, or maybe, again, stab it and go higher. Either way, you are in a place where you have to look, at least the way I think about it, the way I look at things, you're at a level where you have to think about being a buyer of British pound. Okay. Let's go to dollar yen. I'm just going to go to a longer term chart. Oh. Daily chart. 618. Right? Again, 2015 down to 2016. 618 is 115.60, and the high is 115.52, right? So we are right there, or we reversed from there. We had just like Euro, right, and DXY, of course. Excuse me. We had a huge reversal from a level where we would expect to have a reversal. It's also the channel, by the way. And since then, it's just been a big chop fest. Much like Euro, we have a line here, this magenta line, that we can consider as like a bigger picture trigger line. If you get below it, right, it was just support. So if you get below it, you might get something like this, right? Come back, and then it's resistance, something like that. Okay, just a thought. However, for today, I would actually pay attention to 114.40. Okay, that is the 618 of the drop from the top 3 weeks ago. Aussie. So we talked about the big level that was hit last week, right? That low from November 2020. Very short-term hourly chart. Look at this nice little impulse on the upside. So I'm looking near term, as in like the next, let's say, week out or so. I am constructive against that 69.90 low, and I am looking at 70, 60s as support for today, probably with FOMC, right? 70.67 is the 618. Get the spike low at 70.62. 72.90, probably next level for possible resistance. Let's see where that volume weighted average price level is. So that's another thing. We have broken it. So do be careful up here. Another thing, I've been talking about this for like 3 days in my updates, is we have this rip higher in Aussie, right? Holding up pretty well. consolidating from the top of this little move. But Kiwi has indeed dropped to a new low. This is my little arrow action from the updates. And we've been talking about this, anticipating it even, that a lot of times you will see, and I think I even talked about this last week in this webinar, you'll see Aussie and Kiwi at turns, they will non-confirm, right? Or diverge, right? There's a non-confirmation. What that means is one of those two currencies, assets, will make a new low and the other one won't, or make a new high and the other one won't. Like I say, it's like Dow theory for commodity FX. So you see it happen all the time, okay? And it's happening right now. So just because Kiwi's making a new low right now, obviously, and Aussie's not, does not mean that Aussie can't go make a new low. That's not what I'm saying. What I'm saying is we're at a huge price level in both, okay? Again, the 69.90, which was that November 2020 low in Aussie. We also are 30 pips away from the 38.2 retrace in Kiwi from that March 2020 low. All right, so again, huge levels. That's nice. Also, you know, what appear to be, you know, relatively mature patterns in terms of just like look at it. You don't need much of a, you know, a practice or trading in Elliott just to kind of quickly look at the decline from, excuse me, from the October high, okay, in order to count kind of 5 waves down in the subdivisions, right? We've also got a channel here. So there's a lot to, you know, from a technical perspective to suspect that, you know, we could bounce, right? Or just react to the market. That's all. Or the market will react at the point. So when you know, put all that in a petri dish, you know, then it's okay to kind of, you know, anticipate the non-confirmation or diversion. So let's see what happens today, of course. But, you know, in a perfect world, from my standpoint, what would happen is you get an initial reaction of dollar strength, and you would get a spike lower in Aussie and Kiwi would hit 67, and Aussie would hit, what's the level I said? Where's my Kiwi chart over here? 70, 60, and then they would reverse higher. Okay. All right, let's go to dollar CAD. Okay, dollar CAD. All right, we're going to scroll out. Okay. Dollar CAD. Here's what I wrote last night. Okay, dollar CAD's pressing. It's a 25 line from the fork that originates at the 2016 high. See it here. Okay. That line was resistance from September to November of 2020. Over here, right? Okay, we're there now. If price is going to reverse lower, it may not be until after a spike above 29.52, which is over here, right? Reasons that is just kind of intuition and the way that dollar CAD trades. Dollar CAD tends to trade violently at turns, right? You kind of like rip into a high and then reverse sharply, or you absolutely fall off the face of the earth and then reverse sharply. It's just the way CAD trades. It's violent, but it makes trading CAD turns great if you can catch it. So anyway, I'm looking at yeah, for today. Let's see what happens. But yeah, if the close is the biggest thing for me today, right? So like I don't care if we trade up to freaking 130, but as long as we close somewhere down here, that's all I care about. So we'll see what happens with that. But yeah, be aware of maybe possibility of a 29.50 spike and then reversing lower. And I'm going to move to crude oil after that, so which makes sense. So remember, we called the low down here, and we're looking for 73. We got it, 73.30, pulled back, and we look like we're getting support here. Again, you can see that for the last 2 days, actually, we've held up pretty solidly at. We've held up solidly here at this former high and this VWAP level, right? VWAP from the low. You know, so a little upside surprise here would be welcome, as far as I'm concerned. But after that, 76.60s at 618, very close to that former high from July. So again, resistance is probably going to be up around that 77 level, okay? Gold and silver, not even going to look at it today. They're just, I mean, they're just not doing anything. Hopefully we'll have a reason to look at them in 2022. Okay. Let's look at some crypto, and then we'll go to some indices. And actually, before that, copper. Copper, Copper was holding up so well until today. All right, so you can see the 200 moving average now definitively broken. I might also add this trend line definitively broken. And you've got to be looking at possible resistance here now. Okay, if you trade back to this level. But yeah, copper looks like it may be in some trouble. All right, so those are worthless. We don't need that. Okay. All right, well, if you're looking at copper, pay attention to the range lows over here. We start to get down to these levels, which is also a new median line, which hasn't been confirmed yet. We haven't hit it yet. But you get down to that level, looks like it's just north of 4. You could bounce, okay? Here's how I use these median lines. And so people are like, what the hell is that? So it provides a good point of reference. The way it works, if you bounce off of it, okay, then look to short the bounce. If a lot of times you'll see something like this in a very, very weak market, you'll see the market kind of consolidate around it like this. If you see that, be careful, because what tends to happen then is the market will fall out of bed, right? What I mean by that is you'll get median line acceleration where the market will just go like this, and then all of a sudden it's like, okay. If we do break the center line here, then you look for that center line to provide resistance, and then you can sell a weak market against it, okay? All right. Moving on. Oops. Hold on real quick. All right. Let's go to some crypto action here. All right. Bitcoin, essentially the same place we were last week. Remember last week we had, that was the weekend that we had that the crash, right? So I guess I would have done this on probably this day. So we are a little lower last Wednesday, but essentially it's the same idea, right? Like we hit this huge center line on Bitcoin, talking about center lines, and the thinking was probably to sell, if you got to bounce back towards 56,000 or so to sell it. Obviously that hasn't happened. It might not happen. Okay. Ethereum has been the better one for me of late, as far as like, you know, things to trade. So this morning we had a nice move back into resistance. You can see here, I've got that red line, former supports. It was indeed resistance, and so it was a good sale into 38.90s. Downside focus for me initially is going to be about 3,200. Okay, and here's what that is based on. So what I have here is a channel drawn from the March 2020 low. Okay. These little lines that extend outwards from the channel. This is a half channel extension. This is a full channel extension. You can see the full channel extension more or less nailed the high from May. Okay. Eventually, we would expect the market to trade down to that full channel on the low side. Okay. We call that reciprocity, right? Market tends to trade you know, symmetrical, if you will, above and below its median lines. But the half extension, you can see, was also resistance on the way up. Okay. So with that said, I'm looking at 3,200 as a first target. Let's go to some of the other ones that we've been following of late. This is Solana. We looked at this one last week, of course. We noted the huge, you know, contracting nature of the rally over the last year plus. And we've broken that. So this thing is in a super dangerous spot. It's actually holding up really well today, all things considering. But I would look here for move back, or I wouldn't watch for the move back into this level. But if you got it, it's a great setup to short, in my opinion, back into, say, let's call it 186 to like 200 or something like that, right? Former supports here, look for resistance. VWAP from the high is currently 211, but the underside of the line is like 190. So let's call it 190-ish, right? That's your ideal resistance. Okay. Cardano is in a rather precarious situation here. Again, here's the channel. Let's actually see what we've got. Okay, so you can see the half channel extensions on Cardano actually hit the highs pretty good as far as identifying decent resistance. Thusly, your target is the lower channel line here, which is going to be like 0.74 or so, which is like a 50% decline from where we are right now. You can see that we were breaking the channel though now. So that weekend crash hit it. You know, we screwed around, we reversed, now we're below it. So it looks lower to me. I would actually think, I noted this level for possible support. However, my thinking is you probably bounce near 92. That is a median line from this fork. And you can see the 25 line from this fork has crossed through some pivots, right? So this becomes resistance now. Okay, so you look for a drop here and move back to here to sell. All righty. Before I go into the equity stuff, I want to show you some stats on notably Nasdaq AD line. But great time for a quick announcement. Again, if you don't know, we are looking for profitable traders at Scandinavian capital markets. Okay, we launched a new version of our prop trading program, and we are funding up to $1 million. Okay, given that you pass our assessment. No monthly fees or anything like that. No time constraints, right? You just get get funded and trade. So check it out if you want to become a money manager, if that's a goal of yours. Then please check it out. Go to scandinavianmarkets.com/getfunded. That's get funded. All right, moving on. Okay, so what you have here, all right, so this is the S&P chart. I know there's a lot going on, but bear with me. The purple line up here is just the advanced decline line, okay? That's it. All right. We got advances and decliners over here. I keep a 10-day advanced decline line up and a 30-day advanced decline line up. Shout out to Helene Meisler of the street. I got that from her. She's awesome. And then on the bottom is the McClellan oscillator. Okay. So again, nothing too crazy here. I mean, you know, the 30-day AD line for NYSE, right? Which I'm showing S&P here, but it's the NYSE 30-day AD line is down to its lowest level since close to the lows back in 2020, and the 10-day just got down there too. But look at the Nasdaq AD line, right? Look where we are. We're like in like crash territory, or like when the market has crashed. So what I did was before this, and again, we got to see what happens today because these stats could change, like completely reverse or, you know, exacerbate. We'll see after today because we have Fed, right? So we need to look at this after the day's over. I can't really stress that enough. It's like looking at an oscillator, like a price oscillator. It only knows the closing price. Don't look at it in the middle of the day. That said, I'm looking at it right now. Okay, so for argument's sake, let's just say that we do close similar to where we are right now. Your 30-day AD line is minus 633 right now. Okay. When have we seen levels like that before? So here's the magenta dots. They show when you've had levels of 600 or minus 600 or less, right? Well, we got that in March 2020, right? That's when the world was ending and civilization would cease to exist because of COVID-19. But yet here we are, still here. Okay, and then we also had that. This was December of 2018. That was like that Christmas crash deal, right? I think that was actually Christmas Eve. We hit similar levels then. Okay, so here's where it gets interesting. All right, so those two instances obviously were V bottoms and the best buying opportunities of the last couple of years. Scroll all the way back. We hadn't had any readings like this since the financial crisis. It's kind of wild, right? So October 2008, that's last time we had them. Obviously, that was not a V bottom. We still had extremes volatility, both ups and downs to go through. And, you know, eventually, I mean, I guess you could say it was a very long-term buying opportunity. In fact, this area, this is October. I have my vertical cursor here up on the week of 10/27/08. That was actually the low for a lot of markets around the world. A lot of, you know, carry trade stuff and, you know, I think EM, you know, other countries and a lot of commodities. So you could say that, you know, right now, based, this is the weird part, based on right now in this, you know, AD line, that you could say tech is like at panic lows. And it's really weird to say because we're like a couple percent off the highs, I think, in the indices. Okay, the only other time we've seen this AD line like this was actually during the tech bubble burst and subsequent downtrend. So you can see they did tend to happen at lows. You got a bunch of clusters of these readings at lows, okay? And then you'd bounce and what have you and continue lower. So bottom line, all I can say is that, again, the day's not over, but all I can say is that breadth is at a point where you tend to see the market, and this is, again, NASDAQ, you tend to see it occur near lows. The weird thing to me in this situation is that it's happening with like this tiny, tiny dip, right? That's just a function, again, of the indices being dominated by several names, right? Like I think the average stock in the NASDAQ is down like 40% or something, where, you know, we've barely come off the highs here in the composite. All right, so I wanted to point that out. Bring that up later. What else did I want to show you? Oh yeah. Okay, so on that, let's give me some here's some levels to pay attention to when it comes to. We'll look at Nasdaq Futures. Okay. So you know how I talk about, sometimes I talk about daily reversal, resistance, support, and all that stuff. Remember I say draw on the close. So if you did that here, here's the close of the low day. Almost hit it yesterday. I'm not going to put a whole lot of stock into that one. Close of the high day was resistance. This channel, by the way, remains just, I mean, what a beaut. Both channels. Channel here, internal channel. So levels that I'd pay attention to on futures. Again, just total price-based channel stuff here, not worrying about the breadth situation. So look at this one. Kind of the middle of nowhere. Call it 15,420 or something like that. The real problem doesn't really start in this until you break this channel here, the one from March. Okay, then you'd be looking at something much bigger down towards here, but S&P near-term levels are actually a little cleaner for me. So this is the low day, and the close there is 45.34. So I would pay attention to 45.34. Okay, 45.34 might occur with the Nasdaq breaking two lows, where the S&P has not yet done that, and you might get a decent bounce out of that. That's where my head's at. Okay, especially with the breadth that we just looked at. Now, bigger picture, I mean, I don't know, man. I know I just pointed out that extreme breadth stuff, and maybe it needs to be relieved with a violent rally or something for a couple of days. I don't know. But on a longer term basis, I mean, that looks like pretty good resistance to me, doesn't it? This is the S&P, and you're looking at, this is just a line drawn off of that April 2010 and highs here. I mean, just it crosses like every single high since the 2009 low. Okay. And just looking at it this way, let's do this. Every single time we've hit this level, we've eventually had close to a 20% drop. Now, maybe not right away, like you can ride it for a while. I'm not saying that doesn't happen. It could very well happen. But eventually, you tend to get a pretty good pullback. All right. So here you go. 17%, 22%, 15%. And so far, we've had a drop of 5%. So if we were to get something on the order of, let's just say 15% or 20%. 20% takes you down to this line, 3780. 15% takes you to 4,000. I don't know. All I'm saying is this looks like pretty solid resistance to me. It's a line to pay attention to. All right. That's it for me today. I got it all done, everything I wanted to look at. Hope it is useful. Hope it helps. And good luck. Again, FOMC today, ECB, BOE, BOJ tomorrow. Good luck. Be careful. You got like a couple hours left until, actually more than that. You've got like 3.5 hours until we get, no, 2.5 hours, I think, until we get Powell and all that good stuff. So go get some exercise, get something to eat, come back for the fireworks later. All right, again, Jamie Saettele here for Scandinavian Capital Markets and SB Trade Desk, signing off. Have a great rest of your 2021. All right, take care. Bye.